You wake up one morning and see the headline, "Gold breaks $4,200 for the first time in human history." At first, it looks like just another record in a world obsessed with flashy numbers. But then you notice something else. Markets aren't celebrating. The dollar is sliding. Bond yields are convulsing. Central banks are unusually quiet. And the Fed isn't smiling. Because deep down, you sense it. We all do. Gold doesn't surge past $4,200 unless something in the global financial system is cracking. And when gold moves like this, it's never about gold. It's about trust collapsing somewhere else. So you start asking the question almost nobody dares to say out loud, what exactly is the Fed warning us about? And is this the moment historians will later call the beginning of the global reset? To understand why this seemingly harmless metal suddenly detonated in price, you have to go back much further than the latest Fed meeting or last month's inflation report. You have to go back to the cold, brutal history of why gold became the final safe haven when everything else fails, why the world quietly hoards it even while pretending we've evolved beyond it, and why the same cycle of money, debt, and collapse keeps dragging us back to it. If you look closely enough, you'll realize the world never really moved on from gold. We just built a financial tower so tall, so fragile, that returning to gold was only a matter of when, not if. And when the tower shakes hard enough, humans do what they've done for 5,000 years. They run back to the one thing that can be printed, inflated, or politically manipulated. But this time, you're not watching a predictable swing in the gold market. You're watching a global financial order mutating in real time. Because a surge past $4,200 isn't the price of gold going up. It is the price of confidence going down. The world has seen signals like this before, and every time it ended with a painful transformation of power, wealth, and who gets to decide the rules of the global game. That's why we need to talk about the world's oldest obsession, the empire-building, war-fueling, system-resetting force we call gold. Gold was never just a shiny metal. It was a weapon, a shield, a political pressure tool. And in moments of crisis, it becomes something even more dangerous. The scoreboard for which nation is lying about its financial health. To see why the Fed is now trapped, why the world is choosing gold again, and why $4,200 is only the beginning. You have to follow the story back to where all monetary illusions ultimately die. You have to return to the beginning. The first time humans realized gold could be used for power was long before it was used for coins, jewelry, or market speculation. Ancient empires understood something modern economists pretend not to know. If you control the supply of the one thing everyone trusts during chaos, you control the psychology of entire civilizations. Egypt hoarded it to solidify dynasties. Persia used it to pay armies. The Romans used it to anchor their currency until they stretched their empire so thin they had to cheat. They diluted their gold and silver coins with copper to pay for endless wars, inflated their system, and eventually collapsed under the weight of their own financial illusions. Sound familiar? It should. Because every empire since Rome has followed the same script. Grow, overextend, print, inflate, collapse, repeat. Gold sits quietly through every cycle, untouched, accumulating scars and stories, waiting for the next empire to get arrogant enough to declare they've engineered a system that doesn't need it. Fast forward to the 20th century. The United States becomes the new Rome, and like Rome, it uses gold to establish its power. The entire post-World War II global financial system was built on a simple promise. The US dollar was as good as gold. $35 got you 1 ounce of it, guaranteed. Every country used dollars because everyone trusted America's gold. It was the ultimate flex. But behind the scenes, the US government was doing exactly what past empires had done. Spending more than it had, fighting expensive wars, expanding its influence, and printing dollars far faster than it was accumulating gold. By the late 1960s, other countries noticed something wasn't adding up. America claimed it had enough gold to back the growing mountain of dollars, but the math didn't check out. So in 1971, President Nixon made a decision that changed the world. He severed the dollar from gold. No backing, no anchor, just trust. An unbacked dollar became the global standard. From that moment on, gold wasn't part of the system anymore. It was outside the system. And that made it even more powerful. Gold became the quiet judge of monetary honesty. Whenever inflation rose, gold rose faster. Whenever governments printed too much, gold called them out. Whenever trust eroded, gold became the escape hatch. For decades, the US enjoyed the privilege of having the world's reserve currency. It could print almost without consequences. Countries had to accept dollars because there was no alternative, and gold. Gold was treated like a relic, a barbaric leftover from an old world. But gold doesn't care what economists call it. It only cares about reality, and reality is catching up. Because in the last 15 years, the world changed in ways the public barely noticed. China started stockpiling gold like a nation preparing for a monetary war. Russia moved huge reserves out of dollars and into gold. Middle Eastern powers began demanding gold-backed trade agreements. Central banks worldwide purchased gold at the fastest pace since the 1950s, quietly preparing for a world where the dollar might not be king. Meanwhile, the United States did what every empire does in its late stage. It built a mountain of debt so massive that even optimistic economists secretly wondered how the system hadn't cracked yet. The Fed printed trillions. Congress spent trillions more. Interest rates whiplashed between extreme lows and extreme highs. Inflation surged, cooled, then surged again. Foreign countries watched the chaos and realized something chilling. The US was no longer the stable anchor it once was. The dollar was turning into a political weapon. Sanctions froze entire nations out of the financial system, and the rest of the world thought, if it happened to them, could it happen to us? That's when gold became more than a safe haven. It became a plan B for the entire global system. You don't see it yet. But every ounce purchased by a central bank is a quiet vote of no confidence in the dollar-dominated world. Every bar added to China's reserves is a warning shot. Every ton imported by India or Turkey is a sign of countries preparing for a shift they want to announce until it is already too late. Which brings us back to today. To you staring at your screen while gold blasts past $4,200. Gold doesn't move like this unless something is breaking behind the scenes. Maybe it's sovereign debt markets cracking under pressure. Maybe it's the Fed losing control of inflation expectations. Maybe it's foreign governments accelerating their move away from the dollar. Or maybe it is the simple realization that the world has entered the late stage of a monetary cycle that started 50 years ago when Nixon killed the gold standard. When empires reach this phase, their currencies behave strangely. They become volatile, politicized, unreliable. The financial system becomes a maze of contradictions, and gold becomes the scoreboard of global fear. So when gold surges past $4,200, you're not watching a price chart. You're watching a silent alarm, a final warning that the old order is running out of time. And the institution most aware of this? The Federal Reserve. Because the Fed has seen this movie before, they know what comes next. And their warning signs aren't hidden at all. They'd be right in front of us, buried in the language of policy speeches. Interest rate pivots, liquidity injections, and quiet emergency lending programs they hope you were too distracted to notice. The surge in gold is the symptom. What's coming next is the disease. And to understand exactly what the Fed sees and what the global reset might look like, you have to peel back the layers of power, debt, corruption, and geopolitical strategy that brought us to this moment. To understand the magnitude of what's happening, you have to look at the uncomfortable truth the Fed has been whispering between the lines for years. Because while the public thinks the Fed is simply fighting inflation, maintaining stability, or steering the economy, insiders know the real mission. Extending the life of a system that is mathematically running out of road. Every rate hike, every sudden pause, every unexpected pivot, every trillion-dollar liquidity injection, no one reads beyond the headline. These aren't random policy decisions, they're survival moves. The Fed is managing not just an economy, but an empire. And an empire built on debt has only two possible endings: inflate it away or let it collapse. The surge of gold past $4,200 doesn't tell you which path they've chosen. It tells you the world believes they're running out of options. You can see the cracks everywhere. Start with sovereign debt. The US government owes more than $35 trillion, and that number is accelerating so fast it is like watching a speedometer on a car rolling downhill with no brakes. The interest payments alone have exploded past the defense budget. That's not a red flag, that's a burning building. And the people who truly understand this aren't teenagers on TikTok or Twitter, economists arguing about charts. It's the central banks, the ones buying gold faster than at any time in the modern era. China, Russia, Turkey, India, Singapore, Qatar, and a dozen other nations pretending they're still loyal to the US-led financial order while quietly transferring wealth into vaults built to survive a storm. Central banks aren't buying gold because they love jewelry. They're buying it because gold is the only balance sheet asset with no counterparty risk. No one can default on gold. No one can freeze it. No one can sanction it. And most importantly, no one can print it. The moment the world realized that US financial dominance could be used as a weapon, that the dollar-based system could be turned against you, gold became the only insurance policy worth having. That's when the global reset stopped being a conspiracy theory and started becoming a geopolitical project. But the real danger isn't just other nations preparing for a new order. The real danger is that the US itself is drifting into the classic end-stage behavior of a financial hegemon. The Fed is trapped between inflation that refuses to die and a government dependent on borrowing trillions simply to function. If it keeps interest rates high to fight inflation, the debt becomes unpayable. If it cuts rates to save the government's finances, inflation resurges and the dollar weakens. Either path pushes gold higher. Neither path restores trust. Both paths accelerate the reset. You don't have to be an economist to understand how unsustainable this is. You just need common sense. Systems built on promises eventually fail when people stop believing the promises. And right now, the world is losing faith. Foreign countries aren't buying US debt like before. Investors are demanding higher yields to compensate for risk. The Fed is quietly absorbing more of the treasury market behind the scenes. And gold is exploding because it's the final scoreboard of trust. The Fed knows this. They see the liquidity issues in real time. They see the declining global appetite for treasuries. They see how quickly crises are forming beneath the surface. So they issue subtle warnings in speeches that no one reads carefully enough. When the Fed talks about structural shifts, long-term imbalances, or unexpected stresses in funding markets, those aren't academic phrases. Those are coded alerts. Because the Fed can publicly admit what's really happening without causing the panic they were trying to prevent. But the world understands anyway. Especially the countries that have the most to gain from a weakened dollar. China knows that the American-led financial order is its biggest obstacle to global dominance. Russia knows that every sanction accelerates the creation of parallel financial systems. The BRICS nations understand that the US can't maintain control if the rest of the world chooses to de-dollarize together. Gold is becoming the neutral platform on which a new system can be built. And that is the part nobody wants to say out loud. The global reset won to be a dramatic event with explosions, announcements, or world leaders flipping a switch. It will be a gradual decay, a slow migration of trust from one system to another, a silent reallocation of power measured not in speeches, but in tons of gold, quietly moved from vault to vault. You're living through the transition right now. Most people won't realize it until it's over. While the public debates inflation numbers or stock market highs, the real players, the ones who run nations, banks, and entire economies, are preparing for a post-dollar world. They won't say it, they won't admit it, they'll deny everything. But every action they take points in the same direction. When the Fed lowers rates too soon, gold goes up. When they raise rates too late, gold goes up. When they inject liquidity, gold goes up. When they pull back liquidity, gold goes up even faster. The common denominator isn't policy. It's distrust. At $4,200, gold isn't expensive, it's honest. And honesty is a problem for a financial system built on confidence games. But the deeper issue, the one almost nobody dares to discuss, is what happens when the world stops believing that US debt is risk-free. Because the moment the world decides that treasuries are just another overpriced asset backed by a government with more obligations than resources, the global financial order instantly shifts. In that world, the Fed loses its magic wand. The dollar loses its halo. and gold becomes the backbone of a new monetary architecture. This is the scenario the Fed fears most. Not inflation, not recession, not slow growth, but a structural reordering of global power where the United States no longer holds the keys to the world's reserve currency. That's why gold's surge isn't just market noise. It's a referendum on American credibility. Now imagine what happens next. If gold continues its climb, countries holding massive reserves will gain leverage overnight. China's gold-backed trade mechanisms become more attractive. Russia's commodity-backed currency proposals suddenly appear viable. Middle Eastern nations start pricing energy in baskets that include gold. Emerging economies begin using gold settlement systems to bypass the dollar entirely. It won't dismantle the US overnight, but it will slowly weaken the pillars the empire stands on: control over global trade, control over global capital flows, control over global debt pricing. And as that happens, the Fed will face its final and most dangerous dilemma. To keep the system alive, they will have to choose between saving the dollar or saving the economy. They can't do both. Saving the dollar requires high interest rates, fiscal discipline, and a crackdown on inflation no matter how much damage it inflicts. Saving the economy requires printing, spending, and flooding the system with liquidity. One choice kills growth, the other kills the currency. That's the moment gold is signaling. That's the crossroads the Fed is trying to postpone. And that's the phase of the cycle where old systems die and new ones emerge. But here's the part that truly matters for you. Global resets aren't a tea about gold or currencies or central banks. They're about power. Whoever controls the rules of the new system controls the next century. And right now, those rules are being rewritten quietly, behind closed doors, in negotiations the public will never see. Gold is merely the scoreboard. The Fed's final warning isn't a single event. It's a pattern. A quiet revealing of reality through policies they can no longer disguise. And the surge past $4,200 is a sign that the world has stopped believing in the fairy tale of a limitless, risk-free dollar. The global reset has already begun. It's just happening silently, in the background, in gold bars, policy pivots, and geopolitical alliances instead of public announcements. Most people won't prepare. Most won't even understand what happened. They'll look back years from now and say the collapse came out of nowhere. But you? You're watching it unfold in real time. And whether you like it or not, this is the beginning of the next chapter of global power. A world where trust is scarce, systems are fragile, and the battle for monetary dominance decides who rises and who falls. Gold didn't surge past $4,200 because people got greedy. It surged because the world finally admitted the truth.